Today on the My Mortgage Hound Daily Home of the Day, we are talking home affordability. We're going to look at home affordability, FHA loans, and what it looks like to buy in the fourth quarter of 2025. Good morning, good afternoon, good evening, depending on where you're at in the world today. Welcome back to another episode of the My Mortgage Hound Daily Home of the Day. We're going to get right to it, but if you are not subscribed yet, please subscribe. We're trying to get our numbers up. I'm putting together a goal of a number of subscribers we're going to hit by Thanksgiving. So stay tuned for that. Probably we'll make that announcement this Saturday. Let's get right to it. Interest rates. I wish I had something really catchy, clickbaity to put on the channel title and description, but I don't. Rates are flat as a pancake. 6.31 is our conforming rate. Fannie Freddie for jumbo loans, a loan amount over $818,000, 6.22, which is still less than a conforming rate, which is unheard of. And then we're going to be focusing on FHA today, 6.03. The lowest we saw this recently was after the last rate cut. It got down to 5.95, so it's very, very flat, which is great if you are looking to buy this year before the year's up, to know that rates are pretty stable. Now, we're going to see what happens after the next Fed announcement in October. Okay. Found a nice home. This could be a starter home or a move-up family home or even a downsize home. We are going to 1003 East Southview Heights Drive in La Center, Washington, 98629. 3 beds, 3 baths, 1,772 square feet. This home was built in 1995 and is listed by Sean. Now, La Center is a lot closer than it used to be, especially with just being one exit up from Richfield. The Costco, the new In and Out, the school districts are great, and it's a little more affordable, especially with property taxes and that kind of stuff. All right, let's see what Sean has to say. Welcome home. This beautifully refreshed property blends style, space, and comfort. With fresh paint, new carpet, and updated fixtures, it's move-in ready. The open floor plan flows from the living area to a chef's kitchen, featuring an oversized island, ample cabinets, and designer finishes, high ceilings, wide hallways, and custom millwork showcases craftsmanship. Step onto the expansive back deck overlooking a quarter-acre lot, perfect for entertaining and relaxing. A 3-car garage offers space for vehicles, tools, or projects. Don't miss this timeless, modernized home, the entertainer's dream inside and out. All right, let's look at some pictures. Okay, pretty flat driveway, 3-car driveway to go with the 3-car garage. Roof looks like it's in great shape. Low maintenance landscaping. Nice, looks like a nice newer fence. Okay, here's our great room, gas fireplace. I like the windows, looking out the back deck. Looks like you're elevated a little bit. Carpet in the great room, but it looks like either hardwoods or engineered hardwoods. Vaulted ceilings. Here's your formal dining room, I'd imagine. Yeah, those look like engineered hardwoods. Very nice, maybe cherry. Nice island with that appears to be granite, could be quartz, white cabinets. We're at 565, so this is looking very nice and updated on the inside. A lot of homes in this era are ready to be updated, so it's nice to have one that's already updated. Nice big windows letting all that light in the breakfast nook. Utility room. Bedroom number 1. Remodeled bathroom-ish. Looks pretty up to date. Tile floors. Bedroom number 2. And this must be our primary. Nice bath. It's hard to tell if that's been updated or not. The cabinets. Okay. Engineered decking, composite decking. I like the rail. Nice big covered patio. Big deck. Okay, 1/4 acre lot. Looks pretty low maintenance. Looks like we have some ground cover on a slight hill here. So no lawn to mow. Okay. I like it. I like it for a small family home or maybe for downsizing. One of the misconceptions with FHA is that it is for first-time home buyers. FHA is designed to promote home ownership for a wide variety of homeowners. It has a very low down payment requirement of 3.5%. It allows for lower credit scores, higher debt to income ratios, really making it easier for people that maybe are struggling a little bit to get pre-approved. But it is common for first-time home buyers to use a program like FHA. List price is $565,000. And we're looking at this through the glasses of home affordability as we come to the end of 2025. Loan amount with 3.5% down would be $555,311. Interest rate 6.03 is the national average according to Mortgage News Daily for FHA loans. If we look at a breakdown of our payment, property taxes $382, homeowners insurance around $100 a month, mortgage insurance. Now, we'll slow down a little bit here. We normally go through this fairly quickly, but let's break down what exactly mortgage insurance is. Mortgage insurance does nothing for a home buyer other than allows them to put less than 20% down. Anytime there's a mortgage with mortgage insurance, if the homeowner defaults, stops making payments, and goes into foreclosure, the mortgage insurance company reimburses the lender or the investor a percentage of the balance. That way it reduces the risk to a lender to lend to somebody with less than 20% collateral. Mortgage insurance can be applied to almost any product out there. On FHA, you do have it for the life of the loan. Now, the consensus in the market is that interest rates should be improving over the next 3 years. Now, nobody has a crystal ball. The only way to remove mortgage insurance on an FHA is to refinance the house, which we're most likely going to be doing anyways sometime in the next 18 to 36 months. So we could look at possibly removing it then. FHA does have two forms of mortgage insurance. This is the first. This is the monthly amount of $248. Now, this amount will change based off of your loan amount. It's a percentage base. So if your loan amount goes up or down, you can expect the mortgage insurance to go up and down too. And let me do a shameless plug right now. If you like watching these scenarios and you want one of these scenarios ran for you on a specific property or a list of properties, reach out to me. All my information's in the description, and I'd be more than happy to put one of these together for you. Or if you have a house you want to run numbers on for everybody, send me the address and I'll put it on the YouTube channel. So if we add these four numbers together, we get a total payment of $4,070. And this is where we stop and ask, how does that payment sit with you? You're going to have one of three reactions. Oh my goodness, that's way more than I can afford or I was planning on. Or the reaction could be, yeah, that's right in my wheelhouse. I can swing that. The other reaction for my accountants and engineers out there is they go, their reaction is, that's exactly what I calculated. So there's no wrong answer to that question of how this payment makes you feel, but it's important that you ask yourself that question and that you share that with your mortgage lender and your real estate agent that, hey, this is kind of my comfort zone. This payment scares me, or this payment is right in my wheelhouse. Share that information. Okay. Closing costs, around $36.91 for your title and escrow fees, counting your recording fees, those type of things. This is what I want to show you here. Now, this is the second form of mortgage insurance. $12,360 upfront funding fee is what FHA calls this. Now, this gets added to your loan amount, so you're not paying that out of pocket, which is why if we look at our loan to value ratio, with 3.5% down, it should read 96.5, but it reads the 98.29 because we're adding this $12,000. Now, you are entitled to a prorated refund if you do refinance within a certain amount of time. You'll receive a portion of that back. I'm sorry, I did the wrong line. It's $10,086, not the $12,000. The $10,086 is the upfront mortgage insurance. This $12,360 here is what we're going to ask the sellers to pay for us. We're going to buy down the interest rate using a temporary 2-1 buy down that you can add on to almost any loan program out there. So let me clarify. The upfront mortgage insurance, I had the wrong line highlighted, is $10,086. That's what gets added to your loan amount. We're going to ask the sellers to pay. Let me just show you. We're going to ask the sellers to pay for everything: your closing costs, your temporary 2-1 buy down, and your prepaid taxes and insurance and interest. So on this property, we're asking the sellers to contribute or to give $21,051 towards our closing costs and our 2-1 buy down. So our cash to close would be $19,775, which is exactly our down payment. That money can come on FHA from a lot of different sources. Obviously, your checking savings account. It can come from a loan against your 401k. It can come from a gift from a family member. It can come from lots of different sources. But we're bringing in just our down payment in this scenario. So let's talk about the 2-1 temporary buy down. So if the sellers agree to pay it, and I think at this price range, you should have no problem negotiating that. Our interest rate would be bought down by 2% the first year, bringing our interest rate to 4.03, bringing our total payment to $33.90 for the first 12 payments. That saves us $680 a month for the first 12 months. So if your answer to the question of how does this payment make you feel, if you said, you know what, I can afford that payment, but it's going to be a big adjustment from where I'm at now, paying rent or with my current mortgage, this gives you 12 months at a lower payment by $680. And then in year 2, your interest rate's reduced by 1%, 2-1 temporary buy down to 5.03, bringing your payment down to $37.21, saving you $350 for the second year, and then years 3 through 30 you're here. And refinancing is never guaranteed, but you'd have a shot at refinancing somewhere around the low 5s to lock in this payment for the life of the loan. Would be great if that happened. So that's one of many ways to finance a home like that. Home affordability. Let me know what you guys think. Give me a thumbs up. Give me a subscription. And stay tuned for more tomorrow. Bye, everybody.